Hi, welcome back to Joe Blogs. In today's episode, I want to give you an update on what's happening with the ongoing crisis with the Russian ruble. Now, before we get started, I wanted to address some of the comments that have been posted on previous videos that I've made about the Russian ruble, where a lot of people say, what are you talking about? There's no crisis with the ruble. The ruble actually went up 1% last week. You're talking utter nonsense. But if you take a step back and look at what's been happening to the ruble over the last 12 months, it's declined in value by more than 50%. So a 1% recovery on a single day or a single week doesn't make up for the 50% loss in value. That is basically what's referred to as a dead cat bounce. All markets will bounce back to a certain extent, but you have to look at the overall position. And the overall position for the Russian ruble is an absolute disaster in the last 12 months. It's gone from being worth around 60 against $1 to more than 100 recently. Now, because of all of the new capital controls and interest rate increases that Russia have introduced over the last few months, it has improved slightly and is now trading at around 93 to the dollar. But on a 12-month basis, a drop from 60 to 93 is an absolute disaster. If you put that into your personal terms, if you were being paid $93 for a job and then suddenly somebody turned around and said, actually, can I just pay you 60 rather than 93? You would be extremely unhappy. And that's basically the situation that Russia is in. So the value of the ruble may go up 1 or 2% here and there on a daily or a weekly basis. But until there is a serious and sustained recovery in value, the Russian ruble can certainly be classified as being in crisis. And to emphasise that point further, the Russian authorities have now introduced additional capital controls against assets that are owned by Western companies. So this is on top of the interest rate increases and the capital controls that were introduced against Russian businesses at the start of October. And these new capital controls are basically forcing any Western company that wants to sell its assets that are based in Russia to be paid in rubles. And obviously the problem with that for most Western companies is, what do you do with those rubles? Because it's very difficult to be able to exchange rubles outside of Russia. There are not many banks that want to trade in rubles anymore. And obviously companies can't use them to pay for anything because there is no trade being done with Russia right now. So in today's video, I'll have a detailed look at the capital controls that Russia have introduced. We'll have a look at what's happening with the value of the ruble. We'll talk about the Western companies that have recently had their assets seized. So they didn't even get the option of taking any sort of payment in rubles. There was no payment made. Russia just decided to nationalise all the businesses that they owned. And then finally today I'll wrap up with my summary as to why I think these capital controls are actually bad news for Russia and Russia's businesses. And I'll walk you through an example as to why Russian exporters, who are now being forced to sell 75% of all of their foreign currency and convert it into rubles, don't want to be doing that. Why that's actually bad news for the long-term viability of their businesses. But before we get started on all of that, I'd like to say once again, thank you so much to everybody that's bought me a coffee or sent me a YouTube super thanks. Really appreciate that. Thank you so much. And if you'd like to support the channel, please have a look below where you'll find links to my Patreon channel where you can see videos that I'm not posting on YouTube and also avoid the adverts. But if you're not keen on signing up as a patron, you'll also find links to buymeacoffee.com as well as YouTube super thanks and membership scheme. The Russian authorities have now imposed additional currency controls which restrict Western companies that sell their Russian assets from taking the proceeds in dollars and euros. International companies that want to exit Russia now have to sell their assets in rubles, and if they insist on receiving foreign currency for their assets, they face delays or even losses on the sums that can be transferred abroad. Western companies exiting Russia must agree on a sale price in rubles, or, if sellers insist on receiving foreign currency, face delays and even losses on the amounts that can be transferred abroad. These fresh restrictions underscore Moscow's concerns about the continuing depreciation of the ruble. When the ruble first began to weaken in July, Russian authorities first imposed limits on the ways companies exiting the country could take the sale proceeds with them. According to a document published by the Russian Government Subcommittee on Foreign Investments, whose approval is required for transactions involving Western-owned assets. Western companies were presented with two options when selling their assets in foreign currencies: either having the money transferred to a highly restricted Type C account at a Russian bank, or having the proceeds wired to an account abroad, in which case the sum was to be paid in several instalments. Alternatively, the seller could cash out in rubles and receive the entire sum immediately into a regular Russian bank account. But the first two options were in practice further restricted in terms of volume and frequency of payments abroad, as authorities sought to strong-arm companies into doing business in rubles. The restrictions on currency repatriation have added to the growing list of criteria deals must meet before they can be approved. These include a contribution to the Russian budget, which is deemed to be voluntary but in reality is mandatory, which was recently raised from 10% to 15% of the total transaction value. And a further restriction was that the sale of any Russian assets must take place at a discount of at least 50% to the fair value of those assets. An investment banker who recently helped close a deal worth around $300 million said the Russian Commission had set a 7-day deadline on the completion of the sale into a foreign account, but that the buyer was unable to transfer more than $20 million per day. And simple math tells you that the maximum amount that could be transferred within the 7-day deadline was $140 million, so therefore it was impossible for the seller to receive all of the proceeds from the deal. Another person working on a number of exits said the Commission told them that there was an informal cap of $500 million that could be transferred overseas. The state has imposed capital controls without saying so, and has basically said it's not forbidden to be paid in euros or dollars, it's just complicated. It's up to you whether you cash out in foreign currency or rubles, or whether you do not cash out at all. Another Western seller said, first they applied and obtained a sale permit nominated in euros, but the buyer backed off at the last minute. When they applied with the same deal and a new buyer in July, they were told only 50% of the euro proceeds could be received immediately and the rest would be deferred. However, if the seller agreed to a ruble-denominated deal, they were told they could receive the entire sum right away. After being paid in rubles, the seller can either exchange the amount in Russia or try to buy foreign currency abroad. However, both options are bad. In terms of a foreign company exchanging rubles in Russia, the exchange rate is terrible, and it's also difficult to exchange large quantities. And in terms of trying to sell rubles abroad, it's very difficult to find a bank that will accept the currency. When asked about the new restrictions, Kremlin spokesman Dmitry Peskov said demands that Western companies leaving Russia receive payments in rubles were not linked to the currency's recent gyrations. Of course, there can be no free exit now, and the Commission strictly regulates this, Peskov told reporters. Peskov said Russia remained open to external investment and was ready to create good business conditions for foreign companies. He said it was the duty of every government to create the most favourable conditions for its currency, so we create the most favourable conditions for the ruble. He added that the ruble was an absolute priority, and Russia was guided by its own interests and benefits. Russia has blamed the ruble's recent troubles on a drop in export volumes and growing internal demand for imports. Now, before we go on any further today, I want to talk to you about today's sponsor, Atlas VPN, and to tell you about their amazing 3-year deal, whereby you can get full coverage for just $1.70 per month, including an extra 6 months free and a no-risk 30-day money-back guarantee. If you use the internet without any form of protection, you leave yourself exposed to tracking, hacking, and advertising. Using Atlas VPN protects you from all of these. Atlas VPN provides you with comprehensive security and is used by more than 6 million people worldwide. So it's fantastic news that it will protect you from hacking and tracking and data breaches. But what's also great news is that it can save you money and open up a whole new world of entertainment, because it allows you to change your location, which gives you the opportunity to get better deals and to access content that may not be available in your region. Atlas VPN is available to use on unlimited devices for one subscription, and Atlas VPN are currently offering an amazing 3-year deal where you can get full coverage for only $1.70 per month, including an extra 6-month free and a 30-day no-risk money-back guarantee. So to purchase this exclusive Joe Blogs offer, please click in the description below. On Wednesday the 11th of October, President Putin signed a decree mandating the reintroduction of capital controls for an undisclosed list of 43 exporting firms. The controls will last for 6 months, and Russia has not published the list of which companies these measures will apply to. However, they are companies in the fuel, energy, metal, chemical, timber and grain industries. Starting from October the 16th, certain Russian exporters, within 60 days from the moment of receiving funds, are obliged to credit their accounts in Russian banks with no less than 80% of all foreign currency received in accordance with the conditions of their export contracts. They're also required within 2 weeks to sell on the country's domestic market no less than 90% of foreign currency revenues credited to their accounts at Russian banks, but not less than 50% of funds received in accordance with each export contract within no more than 30 days of receipt. So basically what this new law says is that the companies affected have to deposit at least 80% of all of the foreign currency that they receive and then sell 90% of that foreign currency. So basically they're forced to sell around 75% of all of their foreign currency earnings. And then just to make sure these companies are not doing something clever to try to avoid depositing this money, there is a catch-all that says that they have to deposit at least 50% of all of the funds received in accordance with each export contract. President Putin believes that this will solve the problems with the ruble and stated, "There are reasons to believe that the ruble rate is fluctuating because foreign currency earnings are not being returned in sufficient volume to mobilize the money supply on the domestic market. We understand the possible threats associated with the movement of capital," which basically means that President Putin believes that the problems with the ruble are not associated to what's happening with the Russian economy, but rather are down to the fact that exporting companies are not bringing capital back into Russia. This chart shows the exchange rate between the US dollar and the Russian ruble over the last 12 months. And what this shows is that 12 months ago, one US dollar was trading for 61 Russian rubles. Today, it's trading for 93, which represents a fall in value of more than 50% in the last year, which is an absolute disaster from a currency perspective. The long-term value of the ruble has declined significantly. So the value of the ruble can go up on a daily or a weekly basis, but until it returns to the levels that it was trading at prior to Russia's invasion of Ukraine, Russia has a problem. So if we expand the scale of the chart to show the position over the last 5 years, you can see that 5 years ago, one US dollar was trading for 68 Russian rubles. And at the end of 2021, one US dollar was trading for around 70 Russian rubles. So the current exchange rate represents a fall of around 33% against the long-term average value of the ruble. And if we look at what's been happening over the last 12 months, the current exchange rate is the same as it was at the start of August. And at that point, the ruble was in crisis. So there is absolutely no way that the Kremlin is happy with an exchange rate of 93 to 1 US dollar. But let's not forget that the current exchange rate has only been achieved after 4 interest rate rises over the last 3 months, which means that it's doubled in a 3-month period. But in addition to those interest rate movements, there have also been the capital controls that have been introduced against Russian businesses, the exporting companies who now are forced to convert the majority of their foreign currency into rubles, and also the additional restrictions that have now been applied against the sale of any Western assets. So this is a really big concerted effort that's been undertaken by Russia, and the impact of that has only been to increase the exchange rate from around $1 to 100 rubles to $1 to 93. And if these controls were not in place, and if those interest rate increases had not been passed, then it's likely that the exchange rate would be above 100 and could be significantly above 100. If you look at the shape of this chart, the dollar has been strengthening significantly against the ruble throughout the whole of the last 12 months. And if you were to extrapolate the trend forward, it's likely that by the end of 2023, the exchange rate for the ruble could have hit 120 or 130. So Russia is currently doing everything within its powers to maintain the value of the ruble. But even after all of that effort, the ruble is trading at its worst level at any time in history, excluding the very brief fall in value seen immediately after Russia's invasion of Ukraine. And of course, the fundamental reason why the ruble is under such pressure is because of what's happening in the Russian economy. There is a very close correlation between the strength of your economy and the value of your currency. And when your economy is doing badly, the value of your currency usually falls. And that's exactly what's been happening to Russia over the course of the last 12 months. In October 2022, Danone announced that it agreed a deal to sell its Russian dairy business to a Russian buyer for an undisclosed sum. However, it's now been announced that Russia have seized all of the assets of Danone's Russian business, which puts an end to the sale process. This action follows the signing of a decree by President Putin to transfer control of Danone's local subsidiary to Russia's Federal Agency for State Property Management. Danone has subsequently said that it's reviewing its legal options after the Russian state takeover and was in contact with the French authorities, including President Emmanuel Macron's office. In June 2023, Danish brewer Carlsberg announced that it had signed an agreement to sell its Russian business, but was unable to name the buyer or the agreed price for the transaction, which was subject to an extensive regulatory review by Moscow. In 2021, Carlsberg generated 10% of all its revenue in Russia, and in 2022 took a $1.4 billion write-down on its operations. Carlsberg had 8 breweries and around 8,400 employees in Russia. However, it's now been announced that Russia is taking control of Carlsberg's business in Russia. And in response to this action, Carlsberg has stated that it had not received any official information from the Russian authorities regarding the presidential decree or the consequences for its breweries. Carlsberg's new chief executive said on the 31st of October that it would not enter into any deal with Moscow that would make the seizure of its assets look legitimate. There is no way around the fact that they have stolen our business in Russia, and we are not going to help them make that look legitimate, said Jakob Arab Anderson, who took over as Carlsberg CEO in September. The seizure of the Carlsberg breweries follows on from the recent announcement that Dutch brewer Heineken had completed its exit from Russia by selling its operations to Russia's Arnest Group for a symbolic €1, so basically no value. Heineken, the world's second largest brewer, said the deal had received all the required approvals and was likely to leave it with exceptional losses of around $325 million. Heineken had 7 breweries in Russia and 1,800 employees. Chief Executive Dolf van den Brink said, "Recent developments demonstrate the significant challenges faced by large manufacturing companies in exiting Russia. We are happy this process comes to an end and to be able to leave Russia," he added. So what's the summary and conclusion today? Well, I wanted to post this video firstly to give you an update as to what's happening with the capital controls. And as we've seen, Russia have now tightened the net even further on any Western companies that have assets remaining in Russia. And let's face it, there can't be that many companies left that have trading businesses that they're attributing any major value to, because most of the big multinationals have pulled out. They've already said, we don't want to continue working with Russia. Many of them have walked away from their assets. Some of them have managed to get some value for them. And as we talked about in today's video, some are now seeing their assets being seized. And in terms of what the impact is on the Russian economy of all of this, it's a major step backwards. Following the breakup of the Soviet Union in the early 1990s, Russia moved to more of a capitalist structure, and it started forging relationships with big multinationals. And there was a major benefit to the Russian economy for that, because firstly, those companies invested heavily into Russia. They built factories and manufacturing facilities and created jobs, which obviously then paid people's salaries and increased the amount of tax that Russia was charging. So all of that was highly beneficial to the Russian economy from an economic point of view. But also there was a major benefit from a knowledge perspective, because Russia was able to learn how to do business. It was working with the best people in the world in their field. So that was a real step forward. But what we're seeing today is the opposite of that. Russia is retracting from those global relationships. So it's losing the access to all of the knowledge and development and technology that those companies are working with. So this is a real step backwards for Russia. In the current digital age, every company has the opportunity to go global. You can reach markets that you never even dreamed of 30 or 40 years ago. But that's no longer the situation for Russian businesses. And that's going to have a damaging impact on the Russian economy. But the main reason that I wanted to post today's video was to talk about the ongoing problems with the Russian ruble. And as I mentioned right at the start of the video, there are certain people who don't believe there is a problem. But when you look at the facts, when you look at the reduction in the value of the ruble, that tells you the story of what's been happening in the Russian economy. And the fact that the Russian authorities are continuing to introduce additional capital controls tells us that the problem has not been solved and that Russia is currently swimming against a very fast-moving tide. And if they weren't taking all of this action, it's likely that the value of the ruble would be significantly lower than it is right now, probably around 120 or 130 against the dollar. And that would be an absolute disaster, because Russia, even though it's a net exporter, it exports a limited amount of products. It's mostly oil, gas and commodities, and it's importing lots of other finished goods. And the problem that Russia is facing is that all of those finished goods are being priced in overseas currency. So when the value of the ruble starts to fall, they become more and more expensive for Russian consumers. And that's going to drive up inflation in the Russian economy. And that will cause a lot of problems. As we've talked about a lot over the last 2 years, inflation can have a really damaging impact. It lowers your net purchasing power and puts a lot of pressure on wage increases and can become a really vicious circle. And as we've seen over the last few months, the Russian authorities have ramped up interest rates from 7.5 to 15% in anticipation of what might happen to inflation. So the capital controls are designed to try to boost the value of the ruble. But as we've seen from the data, all it's really done is stop the rot, and the ruble is still trading at a level which is significantly below where it was this time last year. And as I mentioned at the start of the video, one of the other things I wanted to talk about today is the damaging impact that the new capital controls that have been introduced by Russia will have on Russian businesses. As a result of the recent decree that was issued by President Putin, many of Russia's largest exporters are now required to lodge 80% of their foreign currency earnings in Russian banks and to convert 90% of that into Russian rubles. So basically what that means is that 72% of all of their foreign currency income will now have to be converted into rubles. And the reason that that's a problem is that those businesses are operating in the international markets. So those companies are being paid in dollars, but they're also making payments in dollars because they're having to trade in the international markets. And the vast majority of companies don't want to be paid in rubles. So they need to keep a supply of foreign currency to keep their trade going. And what I wanted to do now is to talk about how the decline in the value of the ruble has an impact on those sort of businesses. So if we take an example of a Russian exporter that this time last year received $100 million in sales revenue. So applying these new percentages, they would be forced to convert 72 million, representing 72% of 100 million, into Russian rubles. So if that company had done that this time last year at an exchange rate of 60 rubles to $1, that would have meant that they would have 4.3 billion rubles in the bank. So that sounds great. They've got 4.3 billion. They're billionaires. However, if that company now needs to make purchases using US dollars and therefore has to convert those rubles back into dollars, the exchange rate today of $1 to 93 rubles means that that 4.3 billion rubles is only worth $46 million. So that's a reduction in value of $26 million as a direct result of the decline in the value of the ruble. And that really puts into perspective why these capital controls will have a damaging impact on these Russian companies. Due to the fact that they're trading in the international markets and therefore have international costs that are payable in currencies other than rubles, they need access to that currency. So the Russian authorities forcing them to sell and convert into rubles is going to reduce their profits. And if the ruble doesn't improve in value, it will have a really damaging impact on the long-term prospects for those companies. So hopefully that example gives you a better understanding as to why the value of the ruble is so important. It's not just a matter of pride from President Putin's point of view. The fall in the value of the ruble has a damaging impact on businesses and also on consumers because it increases the price of everything that they're buying. So the overall summary of today's video is that the problems with the ruble are continuing. Russia is doing as much as it can to try to bring the value back up. Those initiatives aren't really working. There has been a slight improvement, but it is still year on year hugely down against where the ruble was this time last year. And unless Russia sorts out the problems in its economy, it's likely that that pressure will be maintained and will continue to cause more and more problems for Russia. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.